What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at advanced micro devices, AMD stock, ticker symbol AMD, on a variety of time frames in anticipation of the next trading day, Tuesday, February 20th. Well, AMD stock on Friday, finishing the day just down a bit, 1.63%, $2.89 a share, essentially flat here after hours, up a few pennies here. If we take a look, as always, take that after hours movement with a grain of salt, whether it's in your favor or against your bias. Reason being, see that volume? It's incredibly low. Things get pushed around. I don't know if you've ever traded after hours. I've traded quite a bit after hours. I don't do it really anymore unless there's, an incredible catalyst or something of the like. I mean, it's just so choppy and you absolutely have to take it with a grain of salt. Even with the smallest size, you can move the market. Well, you can move individual stocks, I should say, after hours. It's kind of wild. But let's take a look here at this name, starting on the 1 minute chart. Listen, if you guys get value out of these videos, you want to see me cover AMD more often, I love this company. I would love to talk about it more often. Let me know in the comment section if you'd like me to do so. Also, hope to see you subscribe to the channel. My goal is to hit 1,000 subs by market open on Tuesday. Of course, markets closed on Monday. And I think we can make that happen. So let's do it. I appreciate you guys. Let's take a look here at AMD, starting on the intraday 1 minute chart. Of course, the primary purpose of this video is to take a look at this in anticipation of Tuesday. But in doing so, I am a scalper at heart. So we have to look at intraday opportunity that we could potentially look to capitalize on come Tuesday to generate some scalping revenue around a core position. Okay. So here's the thing, with the majority of most higher level intraday traders, especially scalpers playbooks, mine included, the vast majority of the setups in there that have predictable edge, which have been forward tested and ensured that there is edge in those setups, the vast majority of them, they only have edge. And by the way, I think most traders don't understand this, in stocks that are in play. Okay, there are very few setups that most traders will trade that have edge in just any old stock any day. For example, one of the setups that I developed is called the repeat offender. That has been a backbone setup for me in my playbook, and it's really the primary setup that I teach. That setup itself, the setup is in play. It can occur on any liquid volatile stock on any day. The stock itself doesn't have to be in play. But most of the other setups, for example, a setup that I just taught a class on recently that I named the Breathe and Ghost setup, that one works by far better in stocks that are in play. A stock in play has a fresh news catalyst, elevated relative volume, perhaps a bigger range than normal, is a big mover, it's trending on social media, a lot of interest. Those stocks, there's inherently much more edge there. I've been saying this a lot recently because it's come to my attention that most people don't understand this. I thought that this was a lot more well understood. You take the best traders on the planet. Okay, you put them all in a room and you say, listen, you can only trade Apple intraday from now on. You can only trade AMD, nothing else. You have to trade it and you have to trade it every day. These are the best traders intraday on the planet. And 99% of them will lose money. And they'll admit it. Stock selection is everything. It's everything. When I made that change, everything changed. Okay? I was just trying to trade whatever move, whatever little wiggle. Oh, AMD is wiggling around an EMA. It's not necessarily in play, but let me trade it. You can do everything right and just lose, even with a big sample size, because it's not in play. The market, 99% of the market every day is random. Okay? We have to find what is in play. That could be a stock, most of the time it is, or a particular setup. Now, we know that AMD on Friday, let's be honest, intraday, it wasn't really particularly in play. That's okay. That's not a dig on the stock. I love this company. It's a completely different story here. It just didn't really have a big fresh news catalyst, not elevated R vol. So, on Friday for AMD, that's just the way it was. So, looking, I watch AMD for intraday trades every day, whether it's in play or not. Ideally, I'm really looking for, if it's in play, I'm looking for anything. If it's not necessarily in play, I'm really looking for that repeat offender setup. And there really wasn't much for me here on AMD on Friday. Now, the reason why I bring this up is because I know, and by the way, we're going to get to the big picture, I promise you, but I just want to make this very clear. I think this will save you a lot of money. If you're trading, like if you're looking at this and you're like, yeah, I tried to scalp AMD or day trade AMD intraday on Friday. I felt like I did everything right, and I've been doing this with a big sample size for a lot of trades for months, and it's not working. Your stock selection is off. Okay, I think you're trading the wrong tickers. It sounds great to just say, I'm going to trade Apple every day and only Apple and just be an expert. You know, there's no edge, and that's okay. You know, it's not that big of a deal to just trade in-play tickers and then have a few setups that work. You know, they're in-place setups that work across the board, but those are very few and far in between. The repeat offender, primary setup that I basically have taught for the last 3 years now is one of those. But let's move on here and start getting more contextual on AMD itself as we head into Tuesday. So this is the 5-minute chart. Why are we looking at this? I want to look at volume correlation. What we're looking for is moves in the stock where there are obvious changes in volume that tell us, hey, listen, the sample size of the market agrees with this move more than the other move. All right, you always want to see moves in your favor on any time frame, really, on as much volume as possible, and moves against you on as little as possible. So here on AMD from Friday, we saw this little pop here right off the open and then this big fade. All right, and if we look at volume, we actually saw some increased volume bigger than the open on that fade. Now listen, bulls, understand, a lot of bears are going to look at that and say, that's good. You know, that's good. And they wouldn't necessarily be wrong. However, you know, the movement isn't, you know, it's not crazy. I mean, AMD, we've seen, you know, some pretty volatile moves out of this thing lately, and it was only down 1.63% on Friday. But just understand that the bears are going to look at that and say, that's good. Okay, bulls, one of the best things you can do is understand the psychology of the enemy, so to speak. Bears, that goes for you too. All right. So, and that's really all I can pull out of this 5 minutes. Let's move on. Let's start getting really contextual with day-to-day self-fulfilling prophecy areas, which is really going to be the most heavily watched moving averages on the planet on a variety of time frames. Start with the 30-minute. We have the 200 period, that gray line, right? And the white line, that 50 period. So listen, from a bullish perspective, here's what I'm looking at come Tuesday. First of all, we are riding, I mean, to a T on that 200 period here on the 30-minute chart. I want to see that pop up off of that. Treat that as like a trampoline, okay? Or something. Trampoline wouldn't necessarily look like this. You're just sitting on it for a while. But I want to see us pop up above that, ideally get above that 50 period, really. Now, if you're a bear, if we see a test of that, an upside test of that 50 period, obviously you want to see a hard rejection. But bears, ideally, you would really like to see this thing just kind of melt through that 200 period and fade back downside. All right, let's take a look at the 4 hour now. You can see that the 50 period here on the 4 hour, very much so in play. 200 period, not quite as much. Bulls, 4 hours really easy here. You want to see us treat that 50 period as kind of like a trampoline, right? Bounce up off there. Bears, hard breakdown through, heading down toward that 200 period. Very simple. When it's simple, that's ideal, right? I think a lot of people like to overcomplicate TA, and they think the reason why they're not, you know, making money with TA, you know, people think like, oh, well, they don't know the secrets or this or that. I think a lot of people overcomplicate it. Listen, you know, this whole channel is dedicated to charts, and I have a very simple outlook on charts, and that's why, you know, it tends, you know, to be effective the way I look at it, because it's a self-fulfilling prophecy. I just want whatever's the most simple explanation is what I want to look for, because that's what everybody else is looking for. That's what all the institutions are looking at. The funds, the algorithms are being programmed to look at these things because they're obvious. The less obvious it gets, in my experience, the less effective it becomes. So don't overcomplicate this. When it's simple, when it's obvious, don't overcomplicate it. Okay? Now, the daily. This is the most important chart of all. You can see that the important self-fulfilling prophecy moving averages aren't entirely in play right now. That closest one is the 50-day, and that's down at 155 a share. Here on the daily, things get really clear. Okay? We are approximately 6% away from an all-time high. All right, we're kind of around 175. If I'm a bull, I want to reclaim 175, head up toward 180. Those are going to be two smaller psychological levels that are immediately relevant. All right, and if I'm a bear, reject hard off 175, get downside breakthrough 170 is really what I'd be looking for if I'm bearish here on AMD, looking at the daily. Okay, let's finish up here by taking a look at the options bias in the chain. This is all from Friday. So as we head into Tuesday, this is what the options traders are telling us. 738,000 total contracts. That's a great sample size. 495,000 of those were calls. 242,000 of those were puts. That's a really heavy call side bias. Okay. Now, short-term speculation. What are the speculators in the short term telling us? Well, if we look here, you can see 176,000 calls, 101,000 puts. Okay. Heavy short-term call bias. You look down every other time frame, all the delta ranges. That's out of the money, at the money, and in the money. Short-term, mid-term, longer term on average. All of them pretty heavily weighted to the call side. Listen, as always around here, make sure your risk is managed. The options traders can of course be wrong, but that's what they're telling us here as we head into Tuesday. If you get value out of this video, or you got value out of this video more so, and you'd like to see me cover AMD more so in the future, let me know. Please subscribe to the channel, I appreciate it, and I'll see you in the next one.